Whether we're headed into a recession or we are in one is hotly debated among economists. If you're concerned about your 401k and what a recession might do to your account balance, you're going to want to watch this video until the end because we're breaking down exactly what you need to know to avoid making these costly mistakes. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, well, it's an important one because many
Yeah,
investors are rightfully so concerned about the impact a recession can have on their 401ks.
I've been flooded with calls from clients asking what they should do.
I
People
bet.
are nervous, and I get it. But I
Mhm.
can tell you from my 24 plus years as a financial advisor, times like this is when investors make big mistakes based out of fear.
Right.
And they think they're going to protect themselves, but end up doing the opposite. And what we're covering in this video today is meant to help you not making these mistakes and help you stay on course to meet your retirement goals. Make sure you watch to the end because tip number 5 could save you thousands.
Yes, it can. All right, well, let's get into it then. So you mentioned investors making decision based on fear in markets like this. I mean, I'm assuming this is the first tip, which is like not to panic, not to make rash decisions.
Yeah, you bet it is. This is easier said than done,
Yes,
Michelle.
it is.
Yeah, the thing to remember is rising interest rates are a good thing for our economy, which currently is going gangbusters. Everywhere you look, the consumer is still spending. They're still traveling, buying homes and new cars. Now we're starting to see some slowdown. I
Yeah.
understand that, but try to stay away from the headlines. Do your own research, read the reports that come out, and try to stick to the facts. Listening to the talking heads can often do more harm than good, which
Hmm.
leads me right into the second tip. Don't rush to sell. This isn't the time to get out of the market. During the last 11 Federal Reserve tightening cycles, Michelle, the market has been up 10 of them. Let the market work with what history has shown us. In
Sure.
times like these, the number one mistake that we see is when consumers throw in the towel and
And
cashes
cash
out of
out.
this market.
Right.
The problem with this, Michelle, is you've sold at the bottom of the market or near it. Finance 101 teaches us to buy low and
Yeah.
sell high.
Hi.
And this is the time we should be adding to our long term portfolio, not selling it. Cashing out now may be a big mistake that could lead to longer term regrets as the market does recover.
Yes.
And here's the point. If you would have sold during the last bear market, remember 2008, 2009?
I do.
Oh my gosh, everybody's in a panic, same as now. Not as bad now. Okay. That economy was different. But here's the scenario. You would have missed out on an S&P 500 rally of over 300% during the next 10 years.
It's huge. It's huge. So I'm assuming the opposite is also true. Don't rush to buy, correct?
Oh yeah, you're right. And actually this is the third tip. Don't rush to buy either. Stocks may be on sale, but when the market turns is where we'll see real volatility
Yeah.
because stocks are down so much, you may see a rush to buy any rally and everyone jump in on board, but all of a sudden the next news headlines takes it right back down. So this can be a head fake and
Yeah.
FOMOing in might be bad for your long-term goals. You need to practice some caution as you make new purchases. Slowly step into the market and buy what you feel may be higher 10 years from now. I was doing that yesterday.
So with the 401k though, people are saying DCA, right? They're dollar
Yeah,
cost averaging in each paycheck.
right.
Should people pull back their contributions right now or go more heavy on bonds and stocks? Like, what do you suggest? Or just keep doing what they're doing?
Uh, that's how you slowly step dollar cost averaging is how you slowly step into this market. The best way to do this, Michelle, is to continue to contribute to your 401k each pay period. You have led me into my fourth tip, which is continue your automatic investing from your paycheck and make sure you get the company match.
Yeah,
The,
100%.
the greatest investors in the world are always looking for a sale to buy more stocks. Currently, stocks are on sale, especially some highly rated ones.
Right.
If your employer matches your contributions, you're buying even more stocks at a discount. Think about that with your dollar cost averaging in a down market. Over time, the market has come back 100% of the time. The key, Michelle, is to stay into the market and not try to time the market. You're not a day trader with your 401k. So,
Exactly. Yeah, we've talked about that before. I've been burned so many times trying to time the market. Don't do it. guess what? Market wins every time.
Every single time.
So real quick, before we get into the final tip, fifth and final tip, I should say, if you like the content of this video, hit that like button, subscribe, don't miss another video from us. And also if you have questions, leave comments below.
Definitely.
And of course, share this video with family and friends if anyone you know might find it useful. All right, so Brian, let's get to this final tip that could potentially save us thousands here.
Okay, here it is. Don't forget to rebalance your account. And before I get into this, I want to make something clear. A set it and forget it strategy with your 401k is not going to help you optimize your account. You need to be engaged with your 401k. This is your money and this is your future. For many of you, this is the only account that you have for retirement besides Social Security. Remember that. So if you have to study up on how to pick investments and read your statements and how to rebalance your 401k, now's the time to do it. So let's go into what rebalancing is. Rebalancing is the realigning of your investments in your portfolio to meet back to your original goals. If you were originally a 60% stock, 40% bond investor, you'll want to rebalance periodically to get back to that allocation. By failing to rebalance, though, you're turning over your investments to chance. By not rebalancing, you could open your portfolio to significant losses during bad markets and expose it to more risk. So rebalancing can help you in volatile markets and recessions because it helps you get back to your original level of risk. Yeah, you can smooth out the periods of high volatility and even during a recession.
Okay. All right. So you mentioned something I think is really important about being engaged, not just don't set and forget your 401k and just, shove money in there, but really get engaged. And of course, rebalancing is another way. Another way is reading your 401k statements. We have a lot of people that I know, a lot of people that don't. And I know I've been guilty of it as well, where a statement comes in the mail from like my IRA and I just stick it in the drawer, right?
Right.
So we're going to put a video below. It's not the sexiest topic in the world, but it is really important. And it's a video that Brian and I did on how to read your 401k statement. They all look different, but there are similar components to them. And I highly suggest you check that out.
Definitely.
So Brian, before we wrap this up, is there anything else you want to add?
Yeah, just to follow up on what you just said there. You made a point that sometimes you get your statement in the mail and you just stick it in the drawer.
Yeah.
Okay. First step in being engaged in your 401k, your IRA, any investment that you have out there today is to open that statement.
Yeah.
It starts with you opening that statement. You're not going to learn. Look, it's that important. I don't care how much junk mail you get. Throw that stuff away. I don't care about that. But what I do care about is you have to open that statement. You're not going to understand until you start learning the process. So Michelle, for you personally, go grab that statement out of the drawer that last one you threw in, pull up the video and watch the video while reading through your most current statement.
All right, there you have it. If you like the content of this video, hit that like button. Don't forget to subscribe and do leave us comments if you have questions or, want to share something with us or you want to disagree with us, feel free.
Yeah.
All right. Thank you, Brian, so much for this. And thanks to everyone who watched.
Thanks, everyone. Have a great day.